Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back to your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And with that being said, I hope that you were all having a beautiful day or a beautiful night wherever you guys are out there in the world. So, as we look at the overall crypto market currently, we are sitting at about roughly a $2.26 trillion global crypto market cap. The overall market hasn't moved much in the last roughly 30, 60 days, so like the last 2 months or so. And everyone is on the edge of their seat waiting for something to happen. Well, in this video, we are going to be talking about how the Federal Reserve is about to make us rich, but at what cost? Well, let's talk about it. So first and foremost, like I said, most of the market doesn't look all that great. Most of it is red, but regardless, right? This is short term. Something I outlined over on X actually just recently was going back to 2023 and what ended up happening back in 2023 as well. We look at the all-time chart here, and I just want to really I want to look at this and show you guys real quick what I mean by going back to 2023. So during this time, we had a nice spike up in about roughly the middle of April. We topped out. In fact, we sold off and went sideways all the way into June. It wasn't until the halfway mark in June until we spiked up to the upside. Now, again, was this good to go? Is Bitcoin going crazy? No. We spiked up, retested resistance slightly higher, and then sold off yet again, back testing a support which was at a higher high, which was good, or at a higher low, sorry. And we were still looking for a higher high here, and then we got it in October, and that's when the market went crazy. Currently speaking, we topped out at about roughly the middle of March. Now we've been going sideways for a while. It is the middle of May. And well, it seems as though we're kind of repeating that same exact cycle in terms of the pattern before the next big move, which will most likely happen sometime around the middle to the end of the summer into the fall timeframe, very similar back to 2023. There's also another time frame very similar to this, which was back in 2020. Now, obviously, taking out March of 2020, we had a nice spike up into May, and then just went sideways all the way through the summertime into, of course, the end of summer. And then this is when most of the market started to really kind of take off, which was around October of 2020. Now, during this time, this is Bitcoin, by the way. This isn't the rest of the market. During this time, a lot of altcoins were jumping. We had DeFi Summer, for an example. Even back here, right, most altcoins did not top out in 2023 until a little bit later, which was in the beginning of the summertime. But so far, most of the market has been oversold. It's been ranging sideways, and we have been waiting for a big move. But what is that big move? What's going to cause that big move? Well, let's address this. So on May 1st, I reported on this. The US Treasury is buying back a ton of bonds. This is a big deal because this is increasing liquidity. The first buyback operations are scheduled on May 29th. Don't forget this. And it's May into July. This is going to increase liquidity. They are going to print more money. This happens on May 29th. Mark your calendars. Now, beyond this, right? Also, the M2 money supply. I have been including this in recent videos. This started to push positive. But this is just a slow start. This is just a little bit of a positive on the chart. Well, what's going to cause this to go absolutely crazy? Well, we're going to talk about it. Over here, we have gross issuance of US Treasuries quarterly. This is bonds, notes, and bills. We actually look here, big shout out to Peter St. Onge over here. We have federal debt issuance. COVID spending was supposedly a 100-year emergency. Now, apparently, it's an emergency spending forever. And as we look back into 2020, do you guys see something very similar here? It's the same exact setup. This is what ends up happening when you need liquidity. I've been saying it for well over about roughly 2 years now, since the end of 2022, that liquidity is going to improve greatly, because if we follow the liquidity index, it was destined to. And now we are starting to see liquidity increasing drastically because they are printing more money. This is something you need to focus on, because just like back in 2020, guess what we had in front of us? One of the largest opportunities to make a ton of money in this market. This time around, there's really no difference, except now we're about to see the Federal Reserve go on a printing spree. We're going to talk about that here in a second. Over here is the liquidity index. Like I said, back in 2022, we knew that this thing was basically at its bottom. We knew that this was going to increase drastically. And guess what we got in 2023? We got bank collapses, which really kind of greenlit the printer press, right? That's when the Fed came out and said liquidity around the banking system is fine. How did we know that it was fine? Well, they printed more money. And that's what propped up the banks. Now, we still see bank collapses happening today, but this thing is only going to continue to go crazier. And a lot of people have been saying, like, oh, well, we're not going to top until like mid 2025 because that's when this chart tops, right? Or 2026. I think that we top earlier. I think that the market's going to top like probably around like the end of this year into Q2 of 2025. That's what I'm really kind of looking at. A lot of people are going to get caught and get trapped actually in this market. I hate to say that, but it's really going to happen. And the reason why is because everyone's following this chart to a T. But like I've said, this chart is a legger. Now, outside of that, going over here to Zero Ica, this was back in March when he posted this. This is a great outlook. This is something that I have been following for a while. I want to make you reason about the global liquidity index and Bitcoin relationship. Preview my conspiracy theory at the end of the post. For those who don't know, the global liquidity index is a metric used to assess the availability of cash reserves, credit, and overall monetary conditions in the financial system. In short, when the GLI rises, financial markets tend to perform well because of the contribution of liquidity. Historically speaking, there's the idea that Bitcoin experiences a 4-year cycle because of the halving and the demand that outpaces the supply, creating a good environment in which the price tends to rise. But ultimately, it does follow the liquidity cycle. Down here we have, and yes, on one side this is true, but is it a coincidence that the global liquidity index matches with the 4-year cycle? Oh, fantastic. So I just have to follow the GLI going all in when it's down and selling everything when it's peaking. Before you start your walk towards the sacrificial altar, wait a second and let's take a look at Bitcoin. The orange coin has pumped 370% from the 2022 lows, breaking the all-time high before the halving and also before the midpoint scheduled for October, November of 2024. What does this mean? That the classic cycle might become a left-translated one and therefore shorter. But bro, the global liquidity index is estimated to peak in late 2025. And here we are to my conspiracy theory. On the 5th of October, I highlighted the critical problem of the US, the national debt, which was soaring at $33 trillion. At the current time of writing, the US debt is nearly $34 trillion. But nobody is considering the Damocles sword hanging on the US head. I personally believe the problem cannot be underestimated and that they're hiding it due to the presidential elections. Therefore, pumping the markets in 2024 and making everyone happy before all the chickens coming home to roost. And I completely agree with this, by the way. So what's GLI got to do with that? What if they're planning to release this bomb in 2025 and use the global liquidity cycle to buy the bottom of this potential black swan? Here we have the overall Bitcoin liquid index, followed by the global liquidity index, which is in green, and we can clearly see what's happening here. Now in 2025, he has this potential black swan, maybe US debt, smart money ready to buy the potential black swan with GLI cycle halfway. And here we have, if you think about it, the GLI cycle peaks in 2026. I leave this post here as a reference for the future. The goal of this content isn't to make people scared or something else. It's actually to encourage a rational thinking considering all the data we have at our disposal in order to not get wrecked. Eyes open, consider everything. Now, outside of this, right, like, yeah, if we look at this, it does top around roughly 2025 into 2026. Are we looking at 2025 being 2020? It's a possibility, but again, I'm thinking that we might top earlier than expected. And I think that it all aligns perfectly with election year. But hey, I could be wrong. But outside of this, what is going to cause the liquidity to go crazy? Well, it's the Fed going burr with the printer. Over here, we have US Japan reportedly agree on FX intervention. This happened on the 7th. Now, after this, guess what we got? Literally called it. The Fed has to open a swap line and flood them with dollars. Bailouts for nation states, further increasing global liquidity. And here we have domestic monetary policy also doesn't typically tend or trend around what is happening in other countries, regardless of how closely tied they are. It's unlikely the Fed would cut rates just to save Japan. So a more likely outcome is an intermediate move like funding a large dollar swap line to help with future interventions or interventions at this point. This would be a good medium-term solution, but it has the side effect of increasing dollar liquidity by somewhere in the range of $50 to $100 billion a month, as long as they use the swap line to fund yen purchases. And again, going back to that initial view over here, that would cause the M2 money supply to go absolutely parabolic, just like back in 2020 into 2021. Now, you might be saying, well, Nick, isn't this technically bad? Yes, 100%. It is going to cause inflation to brew even more, which is why I say make sure your money is at work, even outside of crypto. I'm not going to give out financial advice, but there is great opportunities out there to invest in outside of crypto. And there's also gold and silver that you could also be looking into. Now, over here, we have Japan is the largest foreign holder of U.S. treasuries. This was back on March 19th, 2024. They've always been one of the largest holders of U.S. treasuries. Even down here, we have that, in fact, Japan is by far the largest foreign owner of the U.S. Treasury securities, with Japanese banks, pension funds, insurance companies, etc., holding a total of almost 14 trillion at the end of 2023. And here we have a full breakdown in terms of Japan, China, the United Kingdom, and so forth. And the reason why I bring this up is, well, because guess what? If we are going to bail out Japan, what does that say about the US dollar? What does that say about these fiat currencies? What's next? It's currency collapse. We can't think of this as just bullish, right? Because although, yes, the Fed is about to print money and cause crypto to go parabolic, what is the cost of that? Over here, we have currency collapse clown show in all its glory as Japan squanders 55 billion of half-baked yen defense. 25 years of near zero interest rates have crippled the Japanese economy, so it cannot survive interest rates needed to defend the yen. Since 2008, we're following the exact same script. Now, I'm going to play this video here in a second. Over here, we have the Central Bank of Japan cannot intervene in their own currency any longer. It doesn't work. They wasted 55 billion recently trying. 25 years of 0% interest rates have locked the yen into a doom trap or a loop. Japan has over 250% debt to GDP and cannot raise rates, which is what would be needed to defend the currency. Too much debt at 0% rates would implode if rates increase significantly. We are watching the death of the yen. This is also the likely eventual fate of the US dollar and the euro. It's only a matter of time. And yes, it's a very significant time in history. This is why we go back to Zero Ika's chart over here, where we're looking at a potential black swan event in 2025, and yeah, this could very well be leading us into that point. But listen closely to this video by Peter St. Ange.
Japan finally did something about the collapsing yen, quote, shocking markets with a series of pointless interventions traders mocked as, quote, half-assed. So half-assed, in fact, they got Janet Yellen in a snit, who complained that she was not consulted and would appreciate very much being consulted in the future. The currency collapse clown show in all its glory coming to a country near you. First, what Japan did. They apparently carried out a pair of interventions last week, timed for local holidays to maximize pain on everybody betting against the yen, which is indeed everybody. In the first intervention, they boosted the yen from 159 per dollar all the way up to 156. It immediately fell back down to 158, so they tried again, knocking it way down to 153, after which it popped back to 156 and rising. This roller coaster apparently cost the Bank of Japan roughly $55 billion. The problem is it didn't change any of the fundamentals for the yen, which is collapsing because Japan has locked its economy into 0% interest rates while U.S. debt is paying 5%, meaning trillions flooding out of yen assets and into dollar assets, sell enough yen, and presto, it collapses. So if it doesn't change anything, why waste $55 billion? Because they're simply trying to slow it down, to inflict enough pain on yen sellers that they reduce their bets and let the yen die slow instead of fast. Because slow makes better headlines for a Japanese public that is already thoroughly disgusted with their government, sporting roughly 26% approval ratings, yes, even lower than Brandon. The problem is markets know that Bank of Japan is merely slowing the inevitable, meaning markets will keep selling the yen. Moreover, markets also know the Bank of Japan has a finite amount of dollars. They are running out of ammunition. According to estimates by UBS, the Bank of Japan only had $150 billion in cash. That's before they wasted $55 last week. They might have another $150 billion they could convert into cash, at which point they would have to start raiding Japan's international currency reserves built up over decades. That would involve selling potentially hundreds of billions of U.S. Treasury debt. That would be interesting considering Joe Biden's deficits are currently pushing $2 trillion this year, a tsunami of debt even as countries from China to Indonesia are pulling out of dollars, spooked by the recent bill seizing Russia's central bank assets. So what's next? Brought to you by Unchained.com. For Japan, there is no cavalry coming. Decades of zero interest rates and massive deficit spending mean the Japanese economy simply cannot survive interest rates high enough to defend the yen. They're down to throwing bits of broken furniture at the speculative barbarians at the gate. As for the rest of us, what happens in Japan won't stay in Japan, partly because it's the fourth largest economy in the world. This ain't Argentina. If Japan implodes, it takes a large slab of the world financial system with it, starting with plunging treasury prices and the opaque yen carry trade. But more because Japan is a canary in the coal mine for the rest of us, from the US and Europe to Canada and Australia. The entire West is following Japan, converting their once productive economies into subsidized casinos dominated by government spending and money printing. The imploding yen may be the first, it will not be the last. Okay?
And I completely agree with Peter here. Like, this has major consequences. If Japan were to implode, which it seems as though we are propping them up, just like 2008, how we propped up the big banks, we propped up everything with printing. It seems as though we are gearing up for another 08-like event where, in fact, it's Japan that implodes that is going to lead us down the rabbit hole of another 08, where the US dollar and the euro could very well see the eventual fate of the yen as well. Like I've always said, currency collapse is coming. We can no longer sit around and say, hey, our monetary system globally is running fine. No, we know that a collapse is coming. We know that a full reset is coming. That's why we need to make sure that we are focused on the big picture here and what happens after the Fed prints massive amounts of money, pushing these markets even higher, leading into the elections. And then guess what ends up happening next? Well, I'm sure that you guys can probably already guess it. We need to make sure that we are prepared. We need to make sure that our eyes are open and we are not asleep at the wheel. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe to notifications on because more free content. You guys are more than follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.